cruise industry was one of the hardest hit sectors during the pandemic. As the world grappled with the spread of COVID-19, cruise ships, often seen as floating cities, became hotspots for the virus. This led to a series of unfortunate events where ships were stranded at sea, unable to dock due to fears of spreading the virus further. The once bustling ports and terminals turned eerily silent, with ships anchored and no passengers in sight. Global lockdowns and travel restrictions brought cruise operations to a standstill. Countries closed their borders and international travel was severely restricted. This not only affected the cruise industry but also had a ripple effect on tourism-dependent economies. Popular tourist destinations that once thrived on the influx of cruise passengers found themselves deserted. The economic impact was profound, with many businesses struggling to stay afloat. Carnival Cruise Line, the world's largest cruise operator, saw its stock price plummet by over 80% from its pre-pandemic highs. The financial markets reacted swiftly to the uncertainty surrounding the future of the cruise industry. Investors, fearing prolonged disruptions, began offloading their shares, leading to a sharp decline in stock prices. The once stable stocks of major cruise lines became highly volatile, reflecting the broader economic instability. This drastic decline left many investors wondering if the industry could recover. Financial analysts and experts debated the potential for a rebound, considering factors such as vaccine rollouts, changes in consumer behavior, and the overall economic recovery. The uncertainty led to a cautious approach among investors, with many opting to wait and see how the situation would unfold. Fast forward to today, and Carnival's stock is trading at around $8. While this is a significant improvement from the lowest points during the pandemic, it is still a far cry from its pre-pandemic highs. The road to recovery has been slow and fraught with challenges, including changing health protocols, fluctuating travel demand, and ongoing economic uncertainties. This price point is a far cry from its glory days. The cruise industry, once a symbol of luxury and adventure, now faces the daunting task of rebuilding trust and confidence among travelers. As the world slowly emerges from the pandemic, the future of cruise stocks remains uncertain, but there is hope that with resilience and adaptation, the industry can navigate these turbulent waters and set sail towards a brighter future. The $8 price tag on Carnival's stock might seem enticing at first glance. For many investors, a low stock price can signal a potential opportunity to buy into a company at a bargain rate. The allure of purchasing shares at a seemingly discounted price can be strong, especially for a company with a well-known brand like Carnival. After all, this is a company that was once a Wall Street darling. Carnival has a rich history of providing memorable vacation experiences to millions of passengers. Its fleet of cruise ships has sailed to exotic destinations around the world, creating a loyal customer base and a strong brand presence. However, it's crucial to remember that stock prices reflect a company's perceived value and future prospects. A low stock price can also indicate underlying issues that the market has identified. Investors must consider the broader context, including the company's financial health, industry trends, and external factors that could impact its performance. The current price suggests that the market has significant doubts about Carnival's ability to bounce back. The cruise industry has faced unprecedented challenges in recent years, from global travel restrictions to heightened health and safety concerns. These factors have significantly impacted Carnival's operations and financial stability. To determine if this is a bargain or a burden, we need to delve deeper into the challenges and opportunities facing the company. This involves examining Carnival's strategic initiatives to adapt to the new normal, its efforts to manage debt, and its plans to regain consumer confidence. Additionally, we must consider the competitive landscape and how Carnival is positioning itself against other players in the industry. Only by thoroughly analyzing these factors can investors make an informed decision about whether Carnival stock is a worthwhile investment or a risky gamble. The COVID-19 pandemic dealt a devastating blow to the cruise industry. Ships were left idle and revenues dried up. While cruising has resumed, the road to recovery has been anything but smooth. Consumer confidence in cruising is still shaky. The fear of outbreaks, coupled with evolving travel restrictions, has made some travelers hesitant to book cruises. Carnival, like other cruise lines, is grappling with how to regain trust and attract passengers back to the seas. Carnival faces fierce competition from other major cruise lines like Royal Caribbean and Norwegian Cruise Line. These companies are also vying for a slice of the recovering travel market. Adding to the pressure is Carnival's massive debt load. The company took on significant debt to stay afloat during the pandemic. This debt burden will weigh on Carnival's profitability for years to come. It also limits the company's flexibility in pursuing growth opportunities. Section 5. Charting a course: industry trends and consumer demand. Despite the challenges, there are some glimmers of hope on the horizon. The overall travel industry is rebounding. Pent-up demand for vacations, particularly among younger travelers, could benefit the cruise sector. Carnival is banking on innovative new ships and experiences to attract passengers. The company is also expanding its itineraries to include shorter, more port-intensive cruises. These efforts are aimed at appealing to a wider range of travelers. Section 6. Expert opinions. Navigating the choppy waters of Wall Street. Wall Street analysts have mixed opinions on Carnival's future. Some believe the company is well positioned for a comeback, citing its strong brand recognition and loyal customer base. Others are more cautious, pointing to the industry's inherent risks and Carnival's financial vulnerabilities. They argue that it might be years before the company returns to pre-pandemic profitability levels. Section 7. Setting sail for success, analyzing Carnival's potential. So, is Carnival stock a hidden gem at $8? This question has been on the minds of many investors, especially those looking for opportunities in the travel and leisure sector. Carnival Corporation, one of the largest cruise operators in the world, has seen its stock price fluctuate significantly over the past few years. The pandemic hit the cruise industry hard, leading to a dramatic drop in revenues and stock prices. However, as the world begins to recover and travel restrictions ease, there is renewed interest in whether Carnival can bounce back and offer substantial returns to its shareholders. The answer, unfortunately, is not a simple yes or no. Investing in Carnival stock requires a deep understanding of the various factors at play. While the low stock price might seem attractive, it's essential to consider the broader economic environment, the company's financial health, and the competitive landscape of the cruise industry. Analysts are divided on their opinions, with some seeing a potential for recovery and growth, while others remain cautious due to the lingering uncertainties. There are valid arguments to be made on both sides. Proponents of investing in Carnival highlight the company's strong brand, extensive fleet, and loyal customer base. They argue that as travel demand picks up, Carnival is well positioned to capitalize on the resurgence. Additionally, the company's efforts to streamline operations and reduce costs could lead to improved profitability in the long run. On the one hand, the company's low stock price could represent a significant upside potential if Carnival can successfully navigate the current challenges. The potential for growth is there, especially if the company can adapt to new health and safety regulations, attract passengers back on board, and manage its debt effectively. Investors who believe in the long-term recovery of the travel industry might find Carnival's stock price an enticing entry point. On the other hand, the risks are substantial and investors should be prepared for a bumpy ride. The cruise industry faces numerous challenges, including potential new waves of COVID-19, changing consumer preferences, and increased competition. Additionally, Carnival's significant debt load and the need for ongoing capital expenditures to maintain and upgrade its fleet add to the financial risks. Therefore, while the potential rewards are enticing, the journey to recovery may be fraught with volatility and uncertainty. Section 8. Charting your course: key takeaways for investors. Before making any investment decisions, it's crucial to conduct thorough research, consider your risk tolerance, and consult with a financial advisor. Remember, investing in individual stocks, especially in volatile industries like the cruise sector, carries inherent risks. Diversification is key to mitigating those risks. Section 9. Weigh anchor, share your thoughts, and explore further. What are your thoughts on Carnival Cruise stock? Do you think it's a buy at its current price? Share your opinions in the comments below, and be sure to check out our other articles and videos for more in-depth analysis of the cruise industry and investment opportunities.